We've heard time and time again that the bear markets present investors with lifetime opportunities to create financial freedom. What if I told you that time is running out and the best time to invest is immediately right now?
Shut it!
So let's review a few facts. Number one, Bitcoin is down about 60% from its previous all-time high of $69,000. Number two, the lowest Bitcoin went in this current market crash was at around $17,500, which is a 75% drop from its all-time high. Number three, what I think is probably the most important that people don't really realize is that no investor in this world truly knows when the bull cycle will begin, and no investor in the world knows when Bitcoin's bear market bottom really will happen. So let's forget about all these expert predictions and investor speculation on what the future holds. By the time you realize the bull market has started, usually what ends up happening is you missed out and the best investment opportunities that were presented were right before you. So in this video, not only are we going to be going over the massive benefits to investing into the market, but we'll also be going over how you can fully build out a crypto bear market portfolio so you can come out winning. Bear markets are generally defined as a 20% drop in value from a recent high. For the traditional finance markets, Wall Street uses the S&P 500 index to gauge whether the economy is in that bear market, but for crypto, we're going to be using Bitcoin. Now, Bitcoin is currently down about 60% from its recent highs, as we mentioned, but we are way past the bear market threshold, and we could be looking at a bottom. Now, I know I mentioned that no one truly knows that Bitcoin's rock bottom, so yes, Bitcoin may go down even further and even retest the bear market low of $17,000, but it's essential right now to consider one thing, and this is called the risk versus reward ratio. If Bitcoin goes from its current price of $24,000 to a new bear market low of $17,000, then that would result in a decline of over 20%. While there's a considerable unrealized loss, you have to also think about Bitcoin's upward potential. If a Bitcoin rebounds to the $40,000 price level, that's a 73% gain, and when it reaches its all-time high of $69,000 once again, that would be a 200% gain. If you're worried currently at buying in at $24,000, $23,000, $22,000, you have to realize if Bitcoin does drop to test that $17,000 mark once again, you need to factor in the upside potential of Bitcoin and know that there is far more upward potential than the downside that we may see. Now, it's true that investing in bear markets naturally involves more short-term risk because as the prices are lower, investors tend to have no confidence in the crypto markets. But this short-term risk here comes with the long-term probability of incredible returns when the bull market finally returns. And this is the sole reason on why you want to keep your eyes out on investing throughout these times. So if you've been sitting along on the sidelines since the market's been having its tumble, one of the issues that you're going to run into is missing out on the opportunity. Why begin investing right now at over $24,000? The problem with waiting for a slightly better buy-in is that it may never come. What if Bitcoin very slowly and gradually reaches $30,000 to $40,000 by the end of 2022? Are you still going to be waiting for the $20,000 drop? You could buy in at $30,000 and still profit when Bitcoin reaches its all-time high again, but wouldn't it have been better to start accumulating at the low $20,000? Guys, these are all questions that investors face during bear markets, and it can be scary to finally bite the bullet and invest some of your hard-earned money into an asset that you've been seeing falling since the start of this year. Now, the best way to overcome this fear and take full advantage of what's going on is through dollar cost averaging. This is something we talk a lot about on this channel, but that's because it's a proven investment strategy, especially for bear markets.
So Brian, what is dollar cost averaging? How do I get started?
Well, here we go. So dollar cost averaging, simply put, is just investing an equal amount of money at regular intervals, no matter the asset's price. So for example, let's say you're a long-term bullish on a company like Tesla, but you never know the right time to buy Tesla stock because of how volatile the price can be. One day the price is at $800, the next day it's at $900, then after that it drops back to $750. So what you could do is dollar cost average into Tesla by purchasing $50 worth of Tesla stock every Friday morning, and after a few months, you could potentially own an entire Tesla stock at a decent cost basis considering its recent volatile price action. Now, the benefit to dollar cost averaging is that investors can lower their cost basis on assets if the price does continue to drop while simultaneously accumulating positions positions for when the price decides to rise. So dollar cost averaging in bear markets allow you to accumulate positions at low prices to sell high when the markets rebound, and it allows you to really spread out the margins. Now, on the contrary, during bull markets, dollar cost averaging allows you to accumulate positions as the price increase, to which you can decide when you can take those profits off the table. Both beginner and experienced investors benefit from this strategy, and one of the best aspects of DCAing, in my personal opinion, is that it reinforces the habit of investing regularly to build wealth over time. Yes, there's the aspect of making money because that's what we're all doing this for, but there is also the discipline, the psychology behind it. Dollar cost averaging, it builds up the basic principle of understanding that wealth shouldn't happen just overnight, but it's time in and time out. It's continuing to stay resilient and stay consistent. It's also noted that the best investors in the world know that lifetime wealth isn't made overnight. There are far more long-term millionaire investors than there are millionaire day traders, and regular investing is going to help you change your life but still remain consistent. Another example is just the fact that when you look at lottery winners, a lot of them lose their fortune in a pretty short period of time. They can make their money, but usually what happens is you happen to lose it. Individuals who stay consistent within the markets tend to not only make that wealth, but to also retain and keep it. I have built a crypto portfolio. I've seen it hit 7 figures, and I've seen it go underneath that as well. I also started investing into the markets when I had no money. I was a broke bum college student when I first heard about crypto. And I will tell you this, I know how difficult it can be to invest in Ethereum or Bitcoin at their current lows. I know what it's like to go through different cycles. And unfortunately, it is always a possibility that investing into more volatile markets like this, you can lose money. Now, through the good times and bad, your investment strategy helps you to remain the same, allowing you to not stress so much in the long term when you're dollar cost averaging, because you're able to consistently take out profits off the table, or you continue to invest at a regular pace. It's also reinforcing the fact that in the long run, the investment strategy you're sticking with is going to continue to make stress-free money because it's not something that is outside of your control. You just continue to move emotionless. What happens is you also accumulate positions at such a low price, and you're even able to ride the next bullish wave where you can also see huge profits and then know that you won big. So investing into a bear market is going to be a little bit more different than how you normally would invest into a bullish market. Well, this section here, I'm going to go step by step on what you need to do in order to get started. So first of all, sign up with a reputable exchange. I know some of you guys may have used some sketchy exchanges before in the past, an exchange that your friend told you about. During a bear market where we're seeing a whole bunch of liquidations, please make sure that you're using something reputable. There's no limit on how many exchanges you can work with. There's no limit on how many exchanges that you're actively trading with. Now, there are a ton of great exchanges out here alongside the dookie-doo ones, but if you want my opinion on which I believe is the best ones, be sure to check out one of my previous videos I posted titled The Best Crypto Exchanges of 2022. Now, the second thing you do once you have picked out that exchange is ask yourself, how much money can I invest every month? Now, this number is going to differ for every investor, but this strategy doesn't discriminate, and you can begin your dollar cost average strategy if you can spare, say, even $50 a month to $500 a month. The process is the same, it's just with different amounts. Now, what you do next after that is determine your regular investing intervals. Do you want to invest weekly, bi-weekly, monthly? Do you prefer Saturdays to Tuesdays? Maybe you like investing Fridays because you're out with your buddies and you don't want to see that money there, and maybe it'll help you spend less money when you're at the bars. Find what schedule works for you. During the bull market, there was a lot of data that we usually saw on Sundays the markets were coming down. Maybe if you're able to find any type of consistent pattern, depending on which altcoin you're looking at, you can find that is the best day to invest. No matter what day you deem to choose, the principle is still going to apply the same. Now, the next step right after that is determining which cryptocurrencies you want to invest in. So this is going to depend on your risk profile. Are you trying to make long-term gains with the least risk possible? Or maybe you're a young buck, an investor who's trying to bet big and make huge money within some speculative altcoins. Whatever your risk management style is, pick the cryptocurrency you're most bullish on, assign a percentage value to it, and begin dollar cost averaging. As an example of this, if you want to dollar cost into Bitcoin and Ethereum, maybe you'll prefer to dollar cost average 75% of your money into Ethereum and then only 25% of that into Bitcoin. Now, the next step that you want to take after that is going to be to begin your bear market portfolio. So every day that you're due for a dollar cost average investment, make your payment without fail. But if you can also invest just $100 a month into the cash balance balance of your exchange, and then choose weekly intervals on some other altcoins that you may want to pick, you can find yourself expanding the portfolio and diversifying the holdings that you have. Now, some exchanges and brokerages automate this process for you. You can choose any day of the week, any day of the month. You can choose how much money it deducts from your checking account. Just in case it doesn't, you can always set reminders or mark your calendar or leave yourself a note in front of your computer the old school way to let yourself know, hey, invest $100 this week into Ethereum or $100 this week into Polygon or whatever your cup of tea is. Once you have that rhythm set up, this is probably the most important step, and that's to remain consistent. All great things will take time, and dollar cost averaging is no different. If you just started 1 week doing it and then you never did it again after that, that's not dollar cost averaging. That's just buying it once and not buying it again. In most recent months, we've been getting so much more development happening within the market. We had BlackRock's partnership with Coinbase, Ethereum's merge that is coming up this year, and we're getting some Bitcoin private trust funds. Things are not looking too bad. On a macroeconomic scale, I know it's been tough, and I know a lot of the markets have been cooling down. It has been correcting, but keep in mind, anytime you're in a bear market for a long period, usually a very strong bull market rally soon after. Now, to get started today, I think Bitcoin and Ethereum are still considered the two blue chip cryptocurrencies. None of them really compare to the market cap and the size of them right now, but I do think between the two, Ethereum is going to give you much higher upside and gains. At my ripe age of 25 right now, time is flying. I think I started YouTube at 21. If I had chosen to invest into Ethereum rather than Bitcoin earlier on, I would have seen much higher upside, and going back in time, I would have continued to choose Ethereum over Bitcoin unless there was some other reason, like maybe I'm really holding it for a long time and I really see it as gold. And there are plenty of other altcoins that are still way down in price where I can expect to see a 5, 10, 15, even a 20x upside coming out of this bear market. Keep in mind, I'm staying away from a lot of the microcap altcoins. I'm staying away from a lot of the smaller, lower cap, because I do think we're going to see a huge wipeout if this bear market continues. But when it comes to a lot of the top 100 altcoins, I think there's a lot of great safe bets still there. When you're investing, you have to pay something, unfortunately, called capital gains tax. Now, depending on what tax bracket you're in, you could even see some long-term capital gains going over the 20% rate, depending on how much money you make. A lot of people often neglect that, yes, you can make money with crypto, but then after you make that money with crypto, you owe a lot of it to Uncle Sam. Now, there is indeed a way to get around it, and this is by finding a loophole through Roth IRAs or through your 401k retirement account. So if you guys want to get started today, I work with iTrust Capital. They're actually the #1 crypto IRA platform in America. And with them, you can set up a fully self-directed retirement account with anything from crypto even to gold and silver. I was making this video and I didn't even plan on including iTrust Capital into this episode, but it segues so well. I really do wish that I maxed out my Roth IRA way earlier on when I could, or maxed out my retirement accounts with assets that I know will have a significant yield. Now, as a special deal for the Jungie Nation, if you guys want to check them out, create an account, you can earn $100 into your IRA account just completely for free by signing up using the link down below and leaving your account funded for 30 days. Now, that is pretty much going to be today's episode. Thank you all so much again for watching. If you guys did enjoy today's video, don't forget to comment down below the word poll. Comment down below poll if you guys made it to the end. Follow me on Twitter. Follow me on Instagram if you haven't done so already. Please watch out for scammers impersonating me over on social media within the comments of this YouTube channel. And that's about it. Thank you all so much again for watching, and I'll see y'all soon. Peace.